Welcome back to another video. Hope everyone is doing well. So we are a few days away from NFP, and I just want to give a midweek update on what's going on with the NASDAQ. So here we have our setups page on Instagram. Posted a new setup, which is NASDAQ. So basically, we had a buy on NASDAQ and it ended up buying so much actually. So let's quickly switch to the charts. Okay, so what we have here is NASDAQ. So this is the buy that I am on about. So this huge movement right there. Good solid let me see, 126.5. So that basically means if you have 100 rand, you times that 100 rand by 6.4.6, 6.46, yeah, and that would basically what this kind of movement would have made you. So to explain this buy, as you can see, I'm in the 15-minute time frame. What I like to do is just try to avoid the huge time frames when I'm trading indices. So which means I'll kick it off in the small time frame. So right now I'm in the 15, but it's really zoomed out because I'm on a big screen right now. So it looks like everything is included within the chart or frame. But typically, you'll be so zoomed in. So I would, be comfortable starting in the 1 hour time frame. So yeah, right now it looks complicated. All of these are like individual setups. But this week, going on to NFP, it seems like the market is still ranging within these two levels, this support and this resistance right there. And we're only for 3 days away, so it could happen that by the time it's Friday, the market would have broke out of this correction or consolidation. But so far we haven't. And the reason why I got that buy was here there's also a level where there was market accumulating liquidity right here before this buy or this distribution, as well as here the market sold off to these levels, tapped back into the zone, and it reversed, went back for a buy. So the thing is, the market, people really don't like simplifying the market, which is very strange, because one of the most simple things in trading or forex is that the market only moves in two phases, just two phases, not three, not four, just two. So you only have to know two concepts of market movement. So the first type of movement will be obviously our impulse. So an impulse is when the price has direction, whether it's going for a sell or a buy. So on the charts, this will look like this huge buy, this huge buy. So both of these are impulses, impulse, impulse, and dating back to the market, this is an impulse as well, impulse, impulse, and so on, right? So that is the first concept of the market. The second concept would be your correction. A correction is when the price is going sideways without direction, basically. So it's range bound. So it would typically look like this instead of a straight movement, either up or down, right? So in the charts, these would be basically our structures that we trade. All of these are corrections, right? Because the market is actually going sideways within these setups. So in combination, it gives you the simple market movement: impulse, correction, impulse, correction, impulse, correction, impulse. And then, the opposite for downtrend. So that will be an impulse, correction, impulse, correction, impulse, correction, impulse. That's the only way the market moves. It doesn't move in any other way. So in conjunction, these will be, an impulse, correction. Now you know what to expect next. You expect an impulse right after this correction. Whether it's going to be an impulse to the upside or downside, it is up to you to determine that with the type of correction you have. So that's where you start to branch out into more complex topics regarding, the concepts of the market movement. So we have impulse correction, and then the correction, it divides into two categories basically. So you would have one kind of correction and the second kind of correction. So the only two types of corrections. The first one would be your continuation correction, right? So this would be when you get an impulse and then you get a correction, and then this correction continues the previous impulse. So it's going to continue this previous impulse direction. So it's going to continue with that uptrend. That is the first kind of correction. And then the second kind of correction, instead of it continuing the trend, it reverses the trend. So this will be your reversal correction. And, you would get an impulse to the upside. And then instead of getting a flat correction, it will correct all the way up to your level, whether it's a resistance level or whether it's a support level. So instead of it going sideways, it just keeps going within that direction until it reaches a level where it can reverse the price and start selling instead of just buying, right? So that's what we call a reversal, because it's going to reverse the price, it's going to reverse the direction. So those are the only two types of corrections you have. So usually my favorite type of correction would be the continuation correction, because it's much easier to predict compared to the reversal, because you already have an idea of the market direction. Since you have a buy and then the market corrects, and it's a continuation kind of correction, because you can see it by the angle. It's more flat, and it's not moving towards a level, whether it's your resistance or whatever you support, right? So this would typically be an impulse, correction, impulse. And it's my favorite because of that simple strategy. So here we have an impulse, correction, impulse. Impulse to the downside, correction, impulse, right? Just like we have here. Impulse, correction, impulse. And you can see the angle of the correction. It's more flat compared to like a very steep one. So these are more not that flat, but then they're still considered correct continuation corrections, because it's a simple impulse correction just like that. So that's how you can simplify the market in that regard. So let's dive deep to our structure or our correction. So here you can see I have my support, I have my resistance. So the thing to focus on when it comes to a bullish setup like this one, because we're predicting a buy with this one, right, is to only focus on the support, because you want to buy low. So you focus on the support, and there's a concept where the third touch of your trend line of your structure always has the highest probability. So you must always try to wait for the third touch on your structure for you to have, the the most chances of you winning. So yeah, you would have, a touch, a second touch came right there, and this would be our third touch, and that's where we would focus on. So on your third touch, what you would want to see are reversal candlesticks. So those are your shooting stars, your hammer, your doji, evening stars, engulfing, the list goes on, right? So you would want to see them at the reversal, at the third touch of your trend line. So if we zoom in and try to see what kind of reversal we have here, we kind of have like an engulfing, because you can see this bullish candlestick engulfs this previous one. So there will be the engulfing kind of reversal candlestick, and it also shows rejection by this pin or this wick. And then what you would have to wait for next is, a momentum candlestick. So a momentum candlestick is just a candlestick that is big in size. The bigger the candlestick is, the more momentum there is, right? So the next candlestick, you can see it's a bullish candlestick, big in size, bigger than the three previous candlesticks. And that's where you would typically enter, right after all those confirmations and signals. And then, it's a simple buy all the way to the top. And that's the setup that we had for today, which is Tuesday. And Monday, which was yesterday, it's basically the opposite of what we had today, because it was a sell setup. So I'll just quickly go through it, but it's just the opposite of everything that I explained here. So impulse, correction, and we trade the correction. So we always want to enter right at the end of the correction. And how do we know the correction is about to end? Typically by waiting for the third touch. So 3 touches on your support when it's a buy, and on your resistance when it's a sell, because you want to sell at the high and you want to buy at the low, right? So if I can just zoom in a bit, here we can see we have this as our first touch, second touch, third touch, and no, third touch has the highest probability, right? So we want to see what actually happened here. Now hold on. So what you would want to see is the price rejecting, basically. So market rejecting, and we have this pin or wick. And then the second thing you would want to see are reversal candlesticks. So we didn't get reversal candlesticks until these two. So this will be, I think this will be your shooting star, and then this one will be your doji. Yeah, basically. So the next thing that you would want to see is momentum, right? And as you can see, this Next candlestick, huge candlestick, shows a lot of momentum, and that's where you could have sold. Put your stop loss right above and your TP all the way to the low. And how do you know it's a low? Because of this previous level right there. So that's quite the opposite of what we did here. And for all those who love patterns so much, you can also simply say, it's a head and invest head and shoulders. Because I know someone who likes patterns is probably watching this is like, this is an easy head and invest head and shoulders. Yeah, but then the invest head and shoulders alone is not enough. You need to use all of these concepts and just combine them into one thing, right? So yeah, that is it for today.